Today we are diving into one of the simplest and most effective trading strategies. Whether you are a beginner or an experienced trader, this strategy offers a clear and easy way to approach the market. Before we dive deeper into the mechanics, make sure to subscribe to our channel to stay updated on the latest in trading strategies, market analysis, and how to master your financial independence. We regularly share insights and signals that can help you sharpen your skills and grow your portfolio. So, what is a breakout of horizontal levels? In simple terms, a horizontal level is a key price point on a chart where the market has repeatedly reacted. These levels could either be areas of resistance where the price struggles to break higher, or support where the price refuses to go lower. When the price breaks through these established levels, it's known as a breakout. A breakout can signal a major shift in market sentiment. When the price breaks out of a horizontal level, it often triggers large movements as traders enter position anticipating the start of a new trend. How does the breakout strategy work? So, the first step: find active assets with strong trends. The first step is to select assets that are currently showing significant price movement or volatility. Why? Because the more volatile an asset, the more likely it's to break through key levels and generate profitable breakout opportunities. The key to this strategy is finding strong horizontal levels on the chart. These levels act as support or resistance, meaning the price has repeatedly bounced off these levels in the past. The more times the price has touched a certain level without breaking it, the more significant that level becomes. Support level: a price point where the asset stands to stop falling and bounce back up. Resistance level: a price point where the asset struggles to rise above and often falls back down. Zoom out, look at the broader time frame, 4-hour, daily, or even weekly, to get a sense of where the price has stalled multiple times. Make sure the price has touched or approached the horizontal line at least 2 or 3 times. This increases the reliability of the breakout once it happens. For example, if you're trading BTC and you see the price repeatedly testing $90,000 level as resistance without breaking it, that becomes a strong horizontal level to watch. Once you have identified a horizontal level, the next step is to wait for the breakout. A breakout happens when the price breaks through the established support or resistance level and starts moving in the direction of the break. If the price breaks above a resistance level, you enter a buy long trade. If the trade breaks below a support level, you enter a sell short trade. It's better to set a pending order on the level of breakout. Now that you are in a trade, managing your position is crucial for maximizing profits. One of the best ways to secure gains during a breakout is to use limit orders. These are predetermined orders to sell portions of your position as the price reaches certain levels. Here is how you do it. Identify target levels based on previous highs or lows. These are the points where you expect the price may face some resistance or support again. Place limit orders slightly before these levels to ensure your order gets filled. Lock in profits incrementally. Set multiple limit orders at different levels, allowing you to capture profits as the price continues to rise or fall. This way you are securing gains while giving the price room to continue trending. No strategy is foolproof, and there is always the risk of a breakout falling. To protect yourself, place stop-loss order below for long trades or above for short trades. A properly placed stop-loss ensures that one bad trade will not wipe out your account. You will take small manageable losses while still allowing the breakout to run in your favor if it's a genuine move. The advantage of this strategy lies in its risk-reward ratio. Even if you have series of losing trades in a row, a single successful breakout can often cover those losses. For example, you could take 4 losing trades in a row, But if your fifth trade captures a strong breakout, the profit from that trade could easily outweigh the previous losses. This is why breakout strategies are so popular. They offer excellent potential for large gains while keeping risk relatively low. The key here is patience. Many new traders make the mistake of jumping in too early or giving up after a few losses. But with this strategy, persistence can pay off. Why is this strategy effective? First of all, simplicity. There are no complicated indicators involved. You need just to identify strong support and resistance levels. Clear signals. Breakouts provide clear entry and exit signals. Risk management. With the proper stop-loss strategy, the risk can be tightly controlled, while the potential reward remains very high. Even in volatile markets, this strategy helps traders navigate price movements and capitalize on trends that emerge after breakouts. It's highly acceptable and works across different asset classes, from forex to cryptocurrencies. If you want to learn more about these and other powerful trading strategies, make sure to join our Telegram channel. We provide signals, educational materials, and market analysis to help you make smarter trades. Don't miss out on the opportunity to transform your trading approach and achieve financial freedom. So to wrap it up, the breakout of horizontal level strategy is one of the most powerful tools in a trader's arsenal. It combines simplicity with high reward potential and manageable risks. By focusing on key support and resistance levels and following the momentum of price breakouts, you can take advantage of strong market movements. Remember, success in trading often comes down to discipline and consistency. Stay patient and wait for the right setups. The breakout strategy can be your ticket to consistent profits. See you soon.